10 days ago, Elon Musk became the world's first trillionaire. Today, he lost 150 billion in a single day. This is the story of SpaceX's worst trading day since going public, and what it actually reveals about the company underneath all the hype. The crash. On Monday, June 22nd, SpaceX shares fell 16.4%, closing at $154.60. That single session wiped out roughly $400 billion in market value, among the biggest one-day losses by any company in history in dollar terms. Over the full 3-day stretch leading up to it, Bloomberg estimated the company had shed approximately $600 billion total, bringing its market capitalization down to just above $2 trillion. To put the scale of this in perspective, $400 billion lost in a single trading session is more money than the entire annual GDP of countries like Belgium or Sweden, evaporating from one company's valuation in about 6.5 hours of trading. What actually caused it? Here's what makes this crash different from a typical bad news story. This wasn't triggered by a rocket failure, a disappointing earnings report, or operational problems. The catalyst was entirely financial. On Monday, SpaceX announced it was launching its first ever bond sale, essentially borrowing money from investors by issuing debt rather than raising it through stock. The company disclosed plans to sell at least $20 billion in senior unsecured notes, with proceeds intended to repay existing bridge financing and fund general corporate purposes, including its expanding AI infrastructure ambitions. Investors reacted immediately and sharply. The bond sale revived underlying concerns that had been simmering since the IPO. Exactly how expensive is SpaceX's AI expansion actually going to be? Building AI satellites, constructing the Gigasat factory, developing Terafab with Tesla, and scaling Starship all require enormous sustained capital investment. The bond sale was a visible reminder that even with $85.7 billion raised at the IPO and over $100 billion in cash reserves, SpaceX is still planning to take on significant additional debt to fund its ambitions. The personal toll. This sell-off hit Elon Musk personally and dramatically. Because so much of his net worth is tied directly to his ownership stake in SpaceX, the single-day stock decline translated into an estimated $150 billion personal loss in net worth in just one trading session. Even after that loss, Musk remains worth roughly $1 trillion and remains, by a wide margin, the world's wealthiest person. But the speed and scale of that single-day drawdown is a striking illustration of how concentrated and how volatile wealth tied to a single newly public company can be. Who's actually losing money? It's worth being precise about who this sell-off actually hurts financially, because the picture is more nuanced than the headline numbers suggest. SpaceX stock remains roughly 37% above its original $135 IPO price even after this crash. That means investors who received shares directly through the IPO allocation process are still sitting on solid gains overall. However, most individual retail investors who participated in the IPO received only a small handful of shares. For many, just one or a few. The investors facing real losses right now are primarily those who bought shares on the open market during the euphoric rally days, particularly anyone who purchased near this week's intraday peak of $225.64. The 5-day volume-weighted average price sits around $181, meaning the typical post-IPO open market buyer is roughly breaking even. Not devastated, but not the gains many expected just days ago either. The bigger question. This crash raises a genuinely important question that extends beyond SpaceX specifically. How much of the AI-driven excitement across markets this year has been pricing and flawless execution, with little room for the normal bumps, costs, and uncertainties that come with building genuinely new infrastructure at this scale? KeyBank, one of the first major analyst firms to formally cover SpaceX stock, initiated coverage with a cautious sector weight rating just before this crash, explicitly flagging that the stock's valuation had become increasingly stretched following the post-IPO rally. The firm noted that while Starlink alone could justify a meaningful portion of SpaceX's enterprise value, the AI segment while showing real promise with contracts like the roughly $1.25 billion per month Anthropic deal, remains loss-making and is entering what analysts called a prove-it phase over the next 12 to 24 months. 10 days ago, this was simply the story of the biggest IPO in history and the world's first trillionaire. Today, it's a real-time lesson in just how quickly market sentiment can shift, even for one of the most closely watched companies on Earth. SpaceX hasn't failed, the rockets are still launching, the AI contracts are still being signed. But this week proved decisively that even the most hyped IPO in history isn't immune to the basic, unglamorous realities of debt, spending, and investor patience.